It's no secret that as Tesla stock prices continue to fall, investor morale is following behind. However, before you completely give up hope, we may have some encouraging information that suggests the storm may be nearing its end and that stock values may even surge in the next weeks. In the past week, what has Tesla been working on? When it comes to the recent drop in the stock market, what do the experts have to say about it? Will stock prices soon begin to rise again? In today's video, we'll be discussing this and much more. Since early November 2021, Tesla Incorporated's stock price has dropped by more than 25%, from $1,236 to $915 on February 3, 2022, and has recently dropped even further when comparing Tesla to the S&P 500 and the Nasdaq, making it one of the most popular controversial stocks with a following of about 1 million people. While the S&P 500 and the Nasdaq have all dropped significantly over the past month, Tesla's decline is almost 3 times that of either index, suggesting that investors are quite worried about Tesla's near-term pricing outlook. After a steady decline over the past few weeks, Tesla stock may suddenly surge next week due to a number of variables. This week, the market closed at $856.98, and we anticipate further gains in the near future. We believe a rebound is near, and it will begin with a few variables already in place because of a number of optimistic signs. The assembly lines at Tesla Gigafactory, Texas, have been revealed in a series of Snapchat videos recently released by Tesla employees and contractors. The temperature is rising. Tesla announced the first Model Y automobiles were built there late last year. They also mentioned that the first freshly assembled Model Ys from the factory would be shipped out at the end of the first quarter, which would fall somewhere around the month of March. Tesla's future success hinges on the production of the Model Y in the Gigafactory in Texas. It's the first of its kind, and it features Tesla's own structural battery pack and 4,680 battery cells in an electric sport utility vehicle. Until the Environmental Protection Agency and the National Highway Traffic Safety Administration adopt regulatory certification, we don't know how the new architecture will affect the new Model Y specifications, but we should find out shortly. A member of the Tesla team kindly offered to walk us around the plant, giving us a rare glimpse inside after Tesla released some photos from the inside with its recent earnings announcement. And the Tesla plant outside of Berlin is set up and ready to start cranking out new automobiles, despite the fact that necessary governmental approvals have yet to be granted. This will undoubtedly pique people's interest, and it goes without saying that market swings are heavily influenced by the emotions and mindsets of traders. There's also the situation in Ukraine to think about. If Russia keeps threatening to invade Ukraine, it might have an effect on stock market values generally. Although there now appears to be no imminent danger, reports have surfaced suggesting that forces may be invading. Where is the link, exactly? The prospect that Russian President Vladimir Putin may give the green light for an invasion of Ukraine has weighed heavily on global stock markets. As Russian officials announced a partial army pullback from Ukraine's border, the stock market rose, and we expect the rise to continue once the threat is no longer present. As shelling between Ukraine and Russia-backed rebels escalated on Thursday, President Biden warned that the possibility of an invasion remained very high. Fear and distrust have spread throughout the markets as a result of Russia's military buildup. Independent Advisor Alliance's chief investment officer, Chris Zaccarelli, said that Putin's claim that they are beginning to withdraw military from the region is true. Fears of a Russian invasion could have a temporary impact on the stock market. However, if the past is any indication, the effects of geopolitical market volatility in the United States will fade quite quickly. According to a note from Center for Financial Research and Analysis, Sam Stovall, investors can rest easy because the stock market will take a much bigger hit in the long run from the aftermath of the war on inflation than from a potential invasion of Ukraine. St. Louis Federal Reserve Bank President James Bullard expressed concern that inflation could rise without interest rate action from the government. "We're more vulnerable than we've been in a while," he said at a panel discussion at Columbia University, "and things might quickly spiral out of hand. An extreme shock that we can't foresee at the moment, but which would lead to higher inflation, is one possibility. That's exactly the kind of thing we'd rather not have happen. Fed Chair Jerome Powell told CNBC in an interview that more rate hikes are needed in the near future to restrain domestic price increases, since inflation is broadening and accelerating in the economy. According to a market forecast for 2022, the Federal Reserve is expected to raise interest rates twice. BlackRock. Analysts noted too. Based on data from Refinitiv, we anticipate a rate hike from the Fed, but view its cumulative response to inflation as more muted than ever before. Profits for the S&P 500 as a whole are expected to rise by around 11% in 2022, according to estimates from Wall Street. The creation of new jobs is one of the unintended benefits of inflation. The opposite is true for high inflation, which may reduce a company's profitability by increasing the price of its inputs. This is all quite confusing for investors, especially as inflation seems to have varying effects on the economy and share prices. During inflationary periods, individual investors must sift through the noise to make well-informed investment decisions. Certain sorts of stocks typically perform better during periods of rising inflation. Investors make decisions based on their best estimates of the factors that will affect their portfolio's performance. Since after an adjustment period, a company's revenues and earnings should expand with inflation, this could lead to an increase in the general value of stocks and attract additional investors. The company's controversial reputation can be attributed in part to Elon Musk, the company's CEO, who isn't hesitant to cause controversy. His impact on market sentiment and investment behavior appears to be substantial. SpaceX, his other company, has started building a Starship launch platform at the Kennedy Space Center, which is used by NASA. However, Musk stated that the company did not wish to halt ongoing launch operations in Florida to conduct rocket R&D. The rapid growth of the company in Cameron County has been met with mixed reactions from locals. Some are grateful for the new jobs and increased tourism it has brought to the area, while others are concerned that it will threaten the nearby Starbase Wildlife Preserve. The price of Tesla shares usually moves in tandem with news about SpaceX. This was demonstrated by history in 2020, when Tesla's stock price soared despite a lack of concrete data and still beat the market. The successful launch of 2 astronauts by SpaceX is widely credited as the cause of the increase in the company's stock price. In addition, the Biden administration unveiled a plan to award $5 billion to states over 5 years to fund electric car chargers, as part of a bipartisan infrastructure project that includes $7.5 billion to construct a massive network of charging stations for electric vehicles in the United States. The administration's overall plan to combat human-caused climate change and speed up the transition to renewable energy sources centers on this project. When it comes to fuel costs, the Biden administration has advocated for electric vehicles, promising that by 2030, 50% of all vehicles sold in the United States will be electric or plug-in hybrids. As the industry leader in electric vehicles, Tesla stands to gain sales from this, which bodes well for the company's stock price. Since a petition was signed on this issue, Biden has acknowledged Tesla as the market leader. Previously, he had avoided recognizing the brand while naming competitors. Experts and analysts also appear to have anticipated a rebound and are advising investors to buy the dip. Despite Tesla's earlier warning that manufacturing will have to be curtailed due to supply chain problems, production has not been slowed. Both Morgan Stanley and Deutsche Bank have lately issued bullish forecasts for the company. Morgan Stanley has a 12-month price target of $1,300, while Deutsche has set its sights at $1,200 for the stock. Dan Levy, an analyst at Credit Suisse, has corroborated the recent drop in growth stocks since the beginning of the year, alleging that Tesla has been disproportionately damaged. However, he did contend that the share price would recover from its recent drop. The company's future contains great promise, but it is difficult to predict. However, we agree with the positive signs that a recovery is on the horizon. Is next week a good one to buy Tesla stock, or should you sell? Leave a comment below.